What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is May 4th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to discuss the case for a $10,000 Ethereum. I've had personal contacts, fans of the channel in this case, ask a lot about the idea of Ethereum hitting some big even level like 10,000 or 20,000. I want to talk about why I really think, as we always like to do on the channel here, a conservative estimate for Ethereum in this cycle would be something around the range of $10,000. But outside of this, we'll talk about the updates that are going to push Ethereum to that point, that are going to allow Ethereum's major use cases like decentralized finance to reach the point where Ethereum could see such valuations. So let's go ahead and talk about it, guys. Let's dive straight into it. If we take a look here over the last 24 hours here in the market, whereas Bitcoin is down nearly 5%, there's a few key exceptions here in the green. There aren't many plays in the green right now after yesterday's rally in the market. Most plays are starting to fade on their gains. But what's really interesting here is that Ethereum, the second largest cryptocurrency, mind you, is technically in sixth place in the top 100. Right? It's not only registered in 6% moves, still pressing up towards all-time highs for its valuation, but outside of that as well, it's up 32% over the last week here. That's really significant here for Ethereum because now we're starting to see something we haven't seen throughout the cycle, which is really euphoric and parabolic movement that I think is starting to really capitalize and price in some of the upcoming features that Ethereum has, and it's getting investors more excited. So let's go ahead, let's dive straight into it, guys. As Ethereum here has been continuing to pick up, we blew past the previous all-time highs over here in the month of February. We've been continuing month over month on some serious rallies, 34 to 35% here in the month of March. 44.8% returns just in the month of April. And so far, we're already up over 20% here in the first week of May, right? So there's 2 points here to keep in mind. Right? A lot of people are like, either have Ethereum or looking to get into Ethereum. For those who are getting in, already have Ethereum, they're like, oh my gosh, I gotta sell right now. Or sometimes as well, they'll get too much in love with Ethereum, like I'm never selling this, I'm happy, I'm euphoric, this is never gonna end. Neither of those mentalities are good to have, guys. We need to have targets in mind. You could be a part of the 95% of people, again, who are just solely going to either take profits way too early or outside of this will hold to their heart's desire and see parabolic rallies, but see 80, 90% corrections afterwards. We don't want either of those. We want to have some kind of reasonable target for how things can perform. Now, the thing here is that with Ethereum, we have a bit of price history to work with since back here in 2015, but there's not too much we can pull from in the sense of short-term price action that's going to help us. Like looking at the hourly or even the daily in this case, 5-minute chart, we need to look at the monthly charts and take a very simplified approach to understanding what larger investors might be willing to pay up for to Ethereum in this case. Like what's the max price in this case that will really be able to drive Ethereum to a certain valuation before we start to see things coming back down. Well, there's some really interesting market metrics that I want to focus in on that I think can give us a general assumption. And it's not that complex. I'm not using any crazy indicators. It's simply 3 major indicators or per se signs throughout the market that we can have confidence that Ethereum is going to reach $10,000. Okay, so let's first go ahead. Let's hop away from the chart there. Take a look at Ethereum here. You notice what's really interesting here is that Ethereum's sitting around a $385 billion market cap, right? A little over 1/3 of the way to $1 trillion, right? What's really fascinating here is that if we just, again, keep things very simple-minded, right? We don't want to go too over the top, right? Bitcoin right now at this moment in the market is at around $1 trillion market cap. And it's been facing, again, most of its resistance here and starting to set in those lower highs and lower lows here around $1 trillion. What I think is a very reasonable and simple explanation or assumption here is that Ethereum by this cycle could go to $1 trillion. And again, if we take a look at the market cap last time around, it's about a general 10x from the highs, where we peaked out a little bit above $100 billion, right? Very simple analysis here, right? Not overcomplicating things. We are well beyond what we set back here in January of 2018, right? But as we know with cryptocurrency cycles, we can have major parabolic runs. A 10x actually is quite conservative in crypto speak from previous cycle highs to new all-time highs, right? It used to be 50x, 100x in a lot of cases for cryptocurrencies like Bitcoin that have traded all the way back since 2010. So Market cap points us in this direction that we could see a general 3x from this point on. And outside of that as well, when we take a look at the previous two major kind of cyclical rallies in Ethereum, some people would combine these two in this case, and we can take a look at that as well. But if you see these as separate rallies here, I think the really relevant one we need to analyze here is the 13-month rally here from down here at a low of $6.50 per Ethereum all the way up to 1,420 in this case, $1,420. Would have been nice to get those Ethereum at $6. Some people did. I know some people who had Ethereum when it was a couple cents to a dollar. But I digress, guys. It's not about reaping on the past here. It's about trying to learn from it and see if we can capture what is obviously still a phenomenal opportunity in the market. Right? Well, we can see here that this was a nearly 24,000% return in the market here. And if we take a look at the absolute bottom valuation of this rally at $88.20, right, all the way up here towards our target range of basically $10,000, what we get here is about half of what we saw last time in regards to it, right? Even less in this case, a little bit less than half of the percentage return. And what I also did here as well is that I took a look and analyzed at the expansion of each of these cycles. So this was 8 months from bottom to top, and outside of that as well, this one was 13 months, right? So if we're leapfrogging about 5 months in expansion, right, that's the most optimistic expectation would be that we reach $10,000 by September 2021. I'm going to go ahead on a limb and say that even if DeFi has its optimistic summer, I'm not 100% certain we can reach there just yet, right? We want to keep conservative estimations. So what I think, again, makes total sense here and would be something that we could factor in here and keep reasonable is if we were to add these two valuations here, the length of time in this case, right? So instead of 18 months in this case, which we have here, we had 13 and 8, and that's going to give us 21. So by December of 2021, we'd be able to reach $10,000 for Ethereum. This is my estimation here. And again, it's a conservative one. I'd rather keep my estimations conservative and be proven wrong to the upside, right? It doesn't mean exactly, I'm going to only sell at this time frame, etc. But I'm setting my estimations here, right? I'm setting my grounding to not get too overtly optimistic and be like, Ethereum didn't reach my target now, I should probably just sell it, right? When in reality, there's probably not any other better opportunities for me to focus in on at the time, right? Now, we've kind of taken a look here at both the length of cycles here. I mean, this gives a great kind of format here in the logarithmic chart, which we're looking at, for Ethereum to have some moments to pause, like we've seen in previous cycles, and then continue a secondary wave, right? We might be coming up here in a little pause period here, where, again, altcoin dominance starts to go either to other cryptocurrencies or altcoin dominance loses dominance, and it goes back to Bitcoin capitalizing more market share. And then we take on that secondary wave, right? So we've looked at price estimations here, valuations, and time ranges, right? Generally speaking, this sets up a pretty clear roadmap here in the sense of price for Ethereum to reach this range. But as with anything, there needs to be some general kind of narrative to why people are usually buying things. Maybe there's a few exceptions in the world like Dogecoin because much wow, price go up, right? But in regards to something like Ethereum, which is not only a much larger asset, much more established, but outside of this, it has real fundamental use cases on top of it. And I got to say, as someone who back in 2017 saw Ethereum for nothing more than what it was at the time, which was just a conduit for capital to invest in speculative ICOs, during all that noise, like the dot-com bubble back in the late 90s, we now have a real substantial set of use cases, some that are still emerging like NFTs, some that are, again, still in the kind of the backlog in this case for potential narratives. What we've seen very clearly, though, is that Ethereum has found a use case, and one that is extremely powerful, and one that Bitcoin could have captured years ago, but it didn't implement the original proposal that Vitalik, who created Ethereum, wanted to implement on Bitcoin. And that's decentralized finance, right? So let's go ahead here and talk a little bit about what proves this use case here. Whereas for years here on Ethereum, if we go back in history, The price of gas on the Ethereum network, or otherwise what's known as GWE, right? It's the amount of ETH that people are paying for a certain amount of space on a given block, right? Just to put it simple, right? Every transaction that's broadcasted out to the network, there's a cost to it, right? Either depending on how much data your transaction requires. So if I'm just doing a Bob to Alice, I'm sending one ETH from one address to another transaction, it's pretty low in the sense of data. I'm not going to have to spend much GWE, or ETH in this case, right? But if I need to do a complex transaction, like deploying a smart contract, making a swap through a platform like Uniswap, right? All these different tools, decentralized exchanges, decentralized lending platforms, all of these different types of transactions take a bit more computational information, right? And as DeFi started to grow, when we started to have applications like Uniswap that allowed us to trade directly with a smart contract and not have to custody our funds, be able to trade at any time we want, trade any types of tokens we want, and be able to pay lower fees than a lot of major exchanges out there in the market, people started to realize that applications like Uniswap, applications like Compound and Aave, like Curve Finance, all these different tools really did offer some pretty cool use cases. And that led us back last year into a period of time where we reached GWE prices that we hadn't seen on a substantiated level in history. It was a massive moment for Ethereum, but it also made Ethereum very unusable for a lot of people. It got too expensive, right? So we can see here that ever since then, even though there have been some periods where we've cooled down, we've never gone back down to that 10 to 12 GWE level. And I know that a lot of people would say, well, that stinks. It makes Ethereum unusable, right? And I do agree, gas should not be that expensive. What it does prove, though, is that there are applications worth spending that much money in the eyes of users. And that is a very provable point. And you can make the same argument here about Bitcoin in this case. If Bitcoin allows people to pay, $20, $30, $40, if it's saying like, hey, in order to get your transaction validated in the next hour, in the next block, you have to pay 20, 30, $40. People are paying that. That's pretty impressive, right? That shows that people are using it for something. It seems to be value for people. Whether you want to call it pure speculation, that's fine. People are utilizing decentralized exchanges. People are utilizing these services. The only thing we have to do now, as we found our use case, we've proven it, we need to make it usable. And that is going to be reducing cost, increasing throughput, right? And outside of this as well, building the monetary principles to make Ethereum one of the best assets on the market, to be able to reach a valuation like $10,000 per ETH. So how do we get there? Well, what's really important to note is that so far, GWE has been going down quite nicely. And that's because there's been a suite of different scaling solutions finally hitting the Ethereum network. And I got to tell you guys, I'm the biggest critic on this. I understand very clearly, having founded my own company and stuff, there's stuff you don't see behind the scenes. People are really trying to make these things happen, I think, at the end of the day. But I really think the Ethereum community slipped up on not implementing scaling solutions better. I'll say that hands down, my biggest critique of Ethereum. And people who laugh and garner at Binance Smart Chain and not being decentralized. No, Ethereum really failed on this, to be completely candid. Binance almost ate all of Ethereum's lunch, if it hasn't already eaten the good chunk of it, right? And that did put Ethereum in a position where I was really doubting in this case that we might even reach 10,000, 20,000, these big targets people have talked about. But I digress on that. What we have seen now is GWE going back down to consistent double-digit levels, and that's due to scaling solutions like Polygon, previously known as Matic Network, which is more of a sidechain in this case to allow for scalability. That's working, so it's becoming, I think, a mature layer 2 solution. And outside of this as well, there's other things that are coming this summer in July, like Optimism. This is the scaling solution that platforms like Uniswap or derivatives or synthetic asset platforms like Synthetics are opting in to use when it deploys on mainnet in this case. So Optimism, again, is one of various scaling solutions out there in the market. It's one of the leading ones that's coming up, and it's gone through multiple amounts of delays. Again, I don't think that's to any fault of the Optimism team. I think they're working as hard as they can to get this solution out and make sure that it's secure, right? But overall, the estimated launch for this, the mainnet, where you could start to see Uniswap utilizing Optimism or other types of applications on a public mainnet setting, it's going to be in July. If this gets pushed back any further, this is going to hamper a lot of Ethereum's progress unless another layer 2 solution pops up. But either way, this gives us something to look forward to on an investor perspective. People are estimating that this is going to be when it hits mainnet, that it's going to be ready for deployment around them. Whether or not it is or not, that's up to someone else, right, to decide. Now, there's another thing that's coming roughly around the same time as optimism, and it's gotten talked about a lot within the Ethereum ecosystem, and that is Ethereum Improvement Proposal 1559 or EIP 1559. Now, to remove the complexity of EIP 1559, it really does two things. It aims to effectively reduce the amount of fees that people are paying on transactions. It starts to challenge a bit of the traditional fee market model that we've had within Ethereum. But outside of this as well, so that's already one plus, right? Driving down the cost of transactions to some degree, or at least trying to set some limitations. But outside of this as well, Ethereum actually becoming a deflationary currency, a real deflationary asset, right? Whereas Bitcoin in this case, for years we've talked about Bitcoin being deflationary. Technically speaking, on your terminology of deflationary, Bitcoin really isn't deflationary. Bitcoin has a capped or finite supply. Now, this alone is a really cool system. And I actually got to be honest, I'm curious what it's going to look like to have an actual deflationary currency like ETH in this case. But I have to say, even just a cap supply is perfect. I'm not criticizing Bitcoin. I think this might, in the test of time, might be a better system. We'll see. But if you're looking for an asset to just continuously appreciate rather than just become per se money or a unit of account in this case, right? Ethereum might be the better asset here for price appreciation because the supply over time could start to reduce if the staking rewards, and this is something we'll dive into soon, the new ETH being minted every single year starts to get outpaced by the consumption on the Ethereum network because for every block in this case, miners who validate the next set of transactions, who receive that block reward, right? In this case, that is going to start to be outpaced, right? Sorry, let me make sure I phrase this right. The amount of fees in this case that are going to be set aside and basically burned or removed from circulation in each new block that's mined, right? That is going to outpace any new ETH minted. That's the theory here with ultrasound money versus just sound money, right? Now, I really don't want to toss around terms or debate on this, guys. I'm not badgering Bitcoin. I'm just saying that this is out actually giving Ethereum some limitations on supply, whereas for years, Ethereum's circulating supply has been generally increasing, and the monetary policy had been a little bit on and off, right? No one really knew exactly what direction Ethereum wanted to go with its monetary policy. Now, the third big thing we have to talk about here, which is really, really critical for Ethereum, is ETH2 or ETH 2.0. Now, I'm going to be very clear here, and I think, again, some people, not to be rude, but I think some people are very dense in regards to their expectations for ETH 2.0. This is not the full implementations of ETH 2.0 with all of its scaling solutions, with its reduction and the cost of transactions, all the major upgrades that people are really looking for that have an effect, a positive effect on the Ethereum network. They're most likely not coming until 2022. Okay, now there are a few key points here we need to focus on, and they kind of lay it out here on the website, right? They've got the beacon chain, which is already launched, right? This is the beginning transitional phases to launch ETH 2.0. Outside of this, well, we have shard chains and the actual docking or merger of the beacon chain with the existing chain of Ethereum. And this will enable staking for the network, etc., and as well as really kind of take upon the ability to start fractionalizing the actual blockchain so that it's easier to run a node, so you can maintain decentralization, but outside of that as well, be able to take in more throughput, up to 64 times the available mainnet throughput that Ethereum is currently experiencing, breaking the existing validation of the network into 64 shards. And that's why they call it shard chains, right? So these are the three major upgrades coming to Ethereum 2.0, and they're being rolled out in phases. So this is something, again, to look forward to going into the future. And that's not to say that investors can't get excited about this and start paying a premium on Ethereum or buying into Ethereum off of these things. But I just want to make it very clear that Ethereum might peak out before this deploys, right? It's very important to understand that. And it's fixing a lot of things, again, as we've talked about the clogged network, being able to make it easier to run a node on the Ethereum network, and by migrating from proof of work, where miners are basically using a lot of intensive graphics processing units or GPUs, like a graphics card, in order to mine Ethereum and validate transactions, to proof of stake, where stakeholders in the Ethereum ecosystem who own ETH, who stake over 32 ETH in this case, will play a role in that validation process. right? So this is, again, some great information. If you guys want to dive into the website, you guys can read more into Ethereum, learn more about it. But the general thesis here is this. Ethereum has a lot coming in the spring and summer, right? The important thing to understand when you're investing in markets is you kind of have to know when to not get in too early, all right? To not get too optimistic about something way early on in the process, because there could very well be other opportunities that you could ride the wave on in that interim. And I'll say, as kind of a self-criticism here, something that I've learned from, which is that I really wish I would have seen Binance Smart Chain coming a little bit earlier and some of the other competing layer ones. Cardano really was one of the first major altcoins that kicked off. Binance Smart Chain has, or I guess the BNB token in this case, that's kind of the native asset for the Binance Smart Chain, has multiplied 10x against Bitcoin, right? More than 10x, generally speaking. And at that time, it probably wasn't the best to focus on the Ethereum ecosystem, which was claw congested and was waiting for a lot of these things to come. But what I've learned in all my years of investing is that you have to kind of like, and crypto is a bit more quicker, but you have to be able to kind of like step back and be like, okay, on a broad level here, who's winning right now and who's about to start winning? And for me as an investor, I'm much more focused on who's about to start winning in 2 to 3 months' time, right? Who's about to start showcasing everything they've been building, who's about to solidify their place and defend their kind of ownership or dominance within the market, whether it's a company in an industry or a cryptocurrency network. It's synonymous here, right? It's going to be whatever chain can build the best, most secure, decentralized, and most importantly, I know people think that the other two are most important. Unfortunately, it is going to be whoever is most usable, whoever has the most liquidity, whoever has the most functionality, whoever has the most devs. That's what matters. And you have to make sure you also still keep in mind for the security of users, safety and decentralization. I hate to say it, guys, Binance Smart Chain has proven that decentralization is not the concern for end users. If it means that they can swap into the assets they want. And if Ethereum wants to solidify that position, it needs to launch these at the times that it's already projecting. And if Ethereum does do that, if it can achieve these, I think $10,000 Ethereum is not only a conservative estimate, but I think it's inbound here for potentially in 2021. So we will see, guys. Again, Ethereum's got a lot of exciting things going on. But speaking about exciting developments within the cryptocurrency ecosystem, one of those interesting projects that have captured on one of those emerging trends that we talked about is Red Fox Labs, which has recently launched a new NFT kind of showroom or e-commerce platform called Red Fox Vault. Now, I want to spend some time here to dive in a little bit as to what Red Fox Vault is all about, how it's trying to kind of bring in the metaverse concept or this idea of having a virtual realm to be able to exchange goods and services and interact with one another, but also provide a real kind of shopping experience for digital NFTs. And again, for me, with all these kind of concepts in the metaverse, it's a bit kind of not per se new to me, but I still think it's in the early stages. At the same time, Red Fox Labs has been one of the really kind of leading Australian teams in the cryptocurrency space, and they've really been on the frontier of trying some new things within crypto. So I want to go ahead and dive a little bit into what it's about. So I recommend you guys check out some of their content. They have a lot of great content on YouTube, but simply put, Red Fox here is aiming to build an actual area where we can start to interact with one another, exchange NFTs, build out shops where people can actually distribute digital goods, trying to make a virtual e-commerce experience. So not exactly trying to just build a virtual world like something, for example, like Decentraland, or all the other different types of virtual worlds that have been built out there. They're really trying to find a niche here of focusing in on providing a shopping experience for all the digital goods. Because I think Red Fox, at the end of the day, realizes that there is a market for NFTs. People are paying certain rates of Ethereum or cryptocurrencies in order to buy these different NFTs out there on the market. So the core model of this idea is that it's broken up into 5 key sections. And bear in mind, this is not completely launched yet. It's something that's going to be rolled out over time. But overall, they have kind of 5 sections. They have this central hub, and this is kind of like a central home where every user in this kind of metaverse world will start. So just like a video game in this case, you're going to start out somewhere as your character, as your individual coming into the world. And you're going to have 4 other sections throughout the area. And there's a total of about 120 shops here where people are going to be able to basically buy or rent these certain shopping areas where they can showcase different types of digital goods. And to me, I think this is pretty cool. I can see the value of this. I mean, years ago, one ironic thing is that I wanted to create basically like a virtual shopping experience through VR. At least I thought about a concept about that for a long time ago. And whether it's in VR or on your desktop computer, either way, the idea of being able to shop for something virtual like this, like an NFT, and seeing it represented in a virtual world, it starts to make NFTs a little bit more real, and it starts to bring in a much larger argument of the idea of the metaverse and this idea that we can build virtual worlds where items in these worlds are just as valuable as in the real world. Again, there's a few more details here about kind of like renting the shops, the different quarters of the, for example, this kind of metaverse here that they're building in the vault, focused on digital art, music, gaming, and then also the fourth quarter here will be a variety of different general interest stuff focused on specific types of topics or discussions in the interim, right? There's certain things that are trending at the time, so they leave this a little bit more open-ended, to my understanding. And then outside of this, well, there are quartermasters who actually are elected and voted in to actually govern the different regions, make sure in this case that there is constant traffic coming through, trying to drive people into this metaverse to make it interesting and exciting. And the overall idea here, guys, is pretty cool. I like it for the most part. I like this idea of kind of pushing the boundaries in the metaverse. I followed, again, a lot of different projects, Somnium Space, Decentraland. There's a lot of interesting projects out there doing this. But I'll overall say this. The only kind of per se thing that I would say I'd be interested to see some modification in, just being completely honest, is the farming of the tokens. So there's a total supply of 21 million tokens. And to be completely fair, I think it's a very short window for the farming of the actual tokens here for Red Fox Vault. So again, I think that this is something that's probably one thing I'd like to see. It's all being hosted on the Binance Smart Chain. So again, this kind of builds into what we talked about earlier about, again, the Binance Smart Chain, Ethereum, starting to kind of counteract one another, some of the ecosystems breaking off. But overall, I think what Red Fox is doing is pretty cool. I like seeing real products here, and they're building it within the Unreal Engine. I used to do a bit of like game design. It was my first passion before I got into crypto. And it's awesome to see that Red Fox is building out a virtual world that actually looks quite impressive for the most part. Like to actually build something in the Unreal Engine that's, high-end graphics, pretty clean comparative to a lot of the other worlds out there that, just in my opinion, don't really suffice just yet to build that real virtual experience. I'm very excited to see Red Fox Labs give this a try. So if you guys are interested, I'll have a link down below in the description so you can learn more about it. You can check out, again, a lot of the content on their YouTube channel. They do frequent updates. They posted a ton of videos here in the later part of April, updating on all the news that they just recently announced. So I highly recommend you guys take a look through it. But that being said, everyone, thank you all so much for watching this video. I appreciate you guys giving me the time of day here. I hope you all enjoyed this discussion on Ethereum, talking about the leapfrog rally that it's had and how we could be just getting started for a potential additional 3x in growth here, and possibly even higher if Ethereum continues to deliver on what it's promising. All right, guys, that's it for today's video. Thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.